And Tiruppur Export Association, we have projected around $10 billion by 2030, which is a double than our what we are doing at 5.2. As rightly said by Prabhu sir, the current Indian apparel exports is 16 billion, and we are close to one third of India's apparel exports, and 68% of knitwear is from Tiruppur. So we are very, very optimistic.
Indian weaving ecosystem, instead of betting on the old power looms or any other traditional technology, now importing state-of-the-art technology, around 8,000-9,000 crore worth of machines came. That will help even apparel ecosystem. That will also trigger growth in the spinning ecosystem.
What we could say is the next century belongs to India for textiles. So with this, I think we are very optimistic. In line with the government, because the government of India is projected at $40 billion for apparel exports, 100 billion for textiles by 2030.
Good afternoon, everyone, and welcome to this edition of the Sumpoorn MSME Conversations. We are really delighted to be focusing on the textile sector. We've been wanting to do this episode for a very long time because this is one of the most important sectors for the Indian economy. And we are really happy that today we have two guests to join us. Mr. Prabhu Dhamodharan, who's the convener for Indian Textpreneurs Federation, and Mr. N. Thirukkumaran, who's the General Secretary of Tiruppur Exporters Association.
So thank you so much once again. And I'm sure you've had the opportunity to look at our Sumpoorn Index, which is the first of its kind in India and even globally. It is a relative amplitude adjusted diffusion index, which looks at the economic activity of MSME through the prism of GST-led sales. It's a consent-led data gathering from a sample of credit-seeking MSMEs. And we've been measuring this since 2019. We, of course, formally released it in 3 years ago. And the index has been extremely powerful in the sense that it is very clearly indicative of how the MSME health has been in terms of the economic activity that it measures. And last month has been a very, very lovely number that we ended up with at 0.65. It works on a scale of 0 to 1, and 0.65 was the highest that it touched in quite a longish period. And this was, in fact, a surprise to us because we did see that there were a lot of constraints with the market not being so very favorable given the rumblings of the war, etc., etc. But nevertheless, the index came through very, very positive. And in fact, that is also correlating with the index of industrial production, or the IIP, which the government statistics reveal. Very specifically, we've also been measuring industry-specific statistics, which we can come to later.
Actually, yes, even the bank credit numbers says that MSME credit is up, even micro and small up by 30%, medium by 21%. So the last quarter signaled a lot of bullish momentum. And even for textile, we expected a turnaround year. 26-27 may be the first growth year we may witness in exports compared to the previous decade. But now the commodity price increases, and also the effect of war and the fear of inflation slowly stepping in. Normally, these kind of disruptions immediately will not be felt by businesses, because supply chain is so big, so large, and a lot of value additions happening in different stages. So we feel that that initial momentum or the initial expectation slowly coming down, and now the psychological fear factor slowly emerging. Everyone thought that the war will end maybe last month itself due to some positive announcements, but now it's extending. So uncertainty is the basic enemy of businesses. So that's where, yes, you are right, and sentiment was so better in last quarter, and it reflected in even it's. I'm talking about overall industry as well as textile. Textile is cautious. Even if you see the annual results of India's largest banker, credit offtake is much lesser in textile compared to other industries. So now, simply I can say that we are in wait and watch mode.
As I said, the once we had an FTA with the US, I think the momentum was with India, and also the FTA with Europe. The momentum was with India, so everything was positive towards on a positive note. But suddenly this disruption, which was unexpected with the conflict, the West Asia conflict, is actually, in a fact, severely impacting exporters, as I say, because the raw material is volatile. Every day there is a volatility in the market, and especially Mr. Prabhu knows it because he's dealing with a lot of spinning mills. So they are also not at fault because the cotton prices are very volatile. I think basically the raw material itself is I think it's increased by 25% after the post war um, due to various factors. And also the raw materials of dyeing, printing, everything is increased. So mostly it is all byproduct of petroleum. Naturally, when the crude oil is at the highest peak, you have in index. We are little worried, as Mr. Prabhu said, we are worried about the recession, the future, what will happen in Europe or in US, because if there is a recession, then it's going to affect the complete textile chain because the buying power comes down, and that's a worry. Again, as I said, we are also in a wait and watch mode with positivity, the positive feeling that this war ends soon.
So let me just take that thread forward with Mr. Prabhu, sir. When I looked at some of the information, I mean, you got a very impressive membership. It says that there are 1,200 knitwear exporters that have been registered with you, and out of the 1,400 members, and they seem to be contributing the largest chunk to India's exports, which in this case, I have it on record that 55 to 60% is the total knitwear exports of the total country emanating out of Tiruppur. And therefore, the voice from Tiruppur in terms of what the industry seems to be facing or how does it view the future is very, very vital. So we would like to hear from you, where do you see this moving ahead? But before that, I also noticed that 90% of cotton knitwear is also from Tiruppur only. So with such a very large proportion of the textile exports coming from this one particular region, what is the perception from the federation as to how this year is going to be faced and what steps the industry is likely to take and what does it seek from the government by way of measures, etc. So, Mr. Thirukkumaran, and I noticed that in your case you have 292 spinning companies and you're more specific to the supply chain.
Sir, as you said, we are very optimistic and we're about the future. I'm saying not about the current disruption, but we are very optimistic because why? Because we have an FTA with Europe, which is the mother of all deals, and again, agreement which is yet to be signed for the US, but we already have an agreement with them, and all the FTAs with New Zealand, UK. I forgot to mention the most important FTA with UK, which is I think might be end of this month or beginning of next month. We are hoping that it's into force. These are and again like with the Gulf countries like Oman and UAE, and they're already opening talks with the rest of the GEC countries. So there is a very positive thing, and I think government is pushing it very on textile. Their focus is on textile. They're giving They have also announced a scheme called TES, Textile Enhancement and Employment Scheme, which is a very good scheme. They have to, they are, it's only in a draft. They have just listened to our suggestion. They have that to come into the policy effect. As of Tiruppur is concerned, we have done 45,000 crores in 25,
Yes.
24, 25. And this year, up to February, I have done around 40,000 crores. So we are, I think even if we don't cross it, we will definitely reach the same target as last year. Due to factors like the it was not the West Asia crisis at the moment. It is due to the tariffs in US. A little bit of
Mhm.
slowdown was there in the last quarter of this financial year. So but we are very very optimistic about the future.
If you look at the numbers, we have grown about 2%, 2.1%, basis the information that has just now been published as of April by the PIB. FY 24-25 was 3.09 lakh crores and 25-26 was 3.16 lakh crores, contributed largely by a significant chunk of ready-made garments, cotton, yarn, and then man-made fibers, of course. We've noticed that a very large proportion of growth has come from UAE. Of course, Senegal, etc., shows a very big number, but I assume that the numbers are not too large. The growth has been high. And some growth has come from UK and Germany of the order of larger single digits, closer to 10%. And Japan, Egypt, etc., have also shown some uptick. In this context, when you're looking at the various agreements that have been signed, what is the prognosis that we can get as to the size of the growth that one can witness, assuming that the warlike situation resolves very quickly?
Actually, the ready-made garments, see, for example, for the past 10, 15 years, our exports are struck within a band. Yearly, we used to do $16 billion or $17 billion at max. Monthly run rate we used to track. Monthly run rate of apparel export used to be in the range of 1.2 to 1.4 billion dollar. Rupee terms you ignore because rupee appreciation is a different subject in dollar terms. Zero growth for so many years. Some months it may be indicating to a country specific growth, but overall we are not growing at any textile product export. It may be yarn. If you take yarn, we used to be in the range of 9 crore to 10 crore kgs per month. Some months it may come down to 8 crore, some month it may go to 11 crore, but yearly averages are similar. For example, our largest product, ready-made garments, cotton, last 5 years CAGR growth was in the range of 1.2%. And then during 21-22, our volume was at the range of $9 billion, now at 9.48. In contrast, RMF ready-made garments manufactured from the man-made fibers, a degrowth in the range of 5.62% CAGR basis. So finally, net to net, we are not growing. So whether we can outperform in the current year, yes, because of FTAs, as Mr. Thirukkumaran said, everyone are confident that first time we may see some kind of a growth. Reasons vary. For example, you take US, they import $70-75 billion of apparel. You take European Union, 95 billion euros of imports. All markets are very large. Wherever you see, there is a thumb rule, 5 to 6% India holds. For example, European Union, Bangladesh and China together holds 51% of the market. We are at 5 or maximum of 6. So the game changer is FTA. After FTA, level playing field is there. So naturally, we want to compete and steadily gain the market share. We can't do any magic. So naturally, we expect if war is not there, a 10% monthly run rate of apparel exports may reach from 1.4 to 1.6, $1.7 billion. and then slowly every year we can move ahead with the opening up of FTAs. FTA implementation happens only in 27 financial year for 27-28 financial year for European Union. UK FTA will be only implemented in this year. So naturally we can expect 10% growth. 10% should be our aspiration. And
Okay.
if war comes and inflation spikes and other challenges comes, then again it's a question mark.
Yeah, the FTA has given, as you said, I think the FTA has given a level playing field, especially with Bangladesh for knitwear. And also, what I can say about Tiruppur is now we have innovated like a lot of man-made fibers, as you said. That's actually 60% of world's consumption is man-made fibers, which traditionally we have a weak link due to processing. We have a very good yarn and raw material supply, but not as in processing. We don't have a good ecosystem. But I think now Tirupur is developing that ecosystem, and a lot of companies are going into athleisure wear, where there is a big growth in all the brands. So with the FTA, we have a level playing field with Bangladesh. We are pulling some Chinese dollars, especially in my company itself. Around 15% of my 15 to 20% of my production is based on man-made fibers because there are a lot of cotton, polyester, polyviscose. These are little riskier things which Indian companies don't take. But when you have a good ecosystem there, I think the future is bright. And Tiruppur Export Association, we have projected around $10 billion by 2030, which is a double than our what we are doing at 5.2. As rightly said by Prabhu sir, the current Indian apparel exports is 16 billion, and we are close to one third of India's apparel exports, and 68% of knitwear is from Tirupur. So we are very, very optimistic. God forbidden, we don't have any more issues on this West Asia crisis gets solved, and we don't have any more bigger wars like this happening, and so that there is no any supply chain disruption, so that the next, I would say, what we could say is the next century belongs to India for textiles. So with this, I think we are very optimistic, in align with the government, because the government of India is projected at $40 billion dollar for apparel exports, 100 billion for textiles by 2030.
Can we have a sense of how has it been playing out for the smaller players in the ecosystem? Because so far things have been, like you said, quite weak. And now that the FTAs are there, would the benefits go largely to the larger players, or will the smaller players be able to get something out of it?
Even there will be a shift from Bangladesh and some what from China. So that will benefit the whole ecosystem, not only the big players, because there will be capacity is distributed. It is not only with the large players. Large players can expand to a certain extent, not fully. So there is a support mechanism for the larger players. The smaller players also will come in, and smaller players also will be able to directly get benefited out of this. So, what we think is the MSMEs have to become large format, and large format has to become corporates. That is where we can have a big chunk of what China or Bangladesh has. So that is what the aim is. That's what the government is trying to do with all these schemes. Let's hope it gets better. Also, last week we had a discussion with the government for the housing, which is very, very vital and critical for the apparel or the textile sector. So we have given some suggestions. So hope it comes out as a policy very soon.
See, Bangladesh had a very substantial export, and with India taking certain actions in 2024, one expected a very, very large chunk of those exports to be quickly addressed and filled by India. And how much of it actually got harnessed by the Tiruppur segment? And do you have some hard numbers? Because a lot of data seems to suggest that even countries like Vietnam, etc., have benefited by the unfavorable situation in Bangladesh. Did Tiruppur actually benefit?
Not much really. See, we had, as I said, we didn't have a level playing field. To be honest, we didn't see. But buyers are, they don't want to pay 10% more. We are at 9.6 with the GSP and 10.4 or 5 without GSP. So I think people don't want to, because whereas Vietnam is duty free. Why Vietnam benefited is because of the duty free status. So with Europe. So I think we didn't really benefit. And over and above that, we had this um, tariff from US. So in fact, we had a very difficult third and fourth quarter, because third quarter we tried to ship out what we had by giving discounts to the US buyers. So it was a difficult time for us. The last 6 months have been difficult. When it tried to turn positive, this supply chain disruption like the West Asia war is affected us.
One more additional information. Bangladesh, first of all, last year they maintained their volumes, and the disruption happened at political system and other level. Most of the factories tried their level best to manage the situation. The real contraction happening for Bangladesh is for the last 6 months. Actually, the year-on-year volumes are slightly down, and they used to have a $40 billion yearly target. Now with the current run rate, their financial year starts from July. Current run rate, they may touch around 37-38 billion dollars. So the real contraction happening, and it's not because they are losing or something. It's because they have some kind of business contraction in few areas.
Coming
And
very
moreover,
specific,
their energy costs are going up. So
right?
some industries are facing trouble. Energy availability itself is a challenge for them nowadays.
But the LDC status is expiring in 27, right? So is that going to be a game changer for India?
Now they are requesting for further extension. I think the Western world will help them further. Maybe that all depends on political equations.
So coming from the supply chain side and capacity creation, this can be taken by either of you gentlemen. Is India actually geared to take on the large opportunity that is visible? Because we are talking about multi-billion-dollar opportunity, right? When I'm looking at the EU FTA as well as even UK FTA, I mean, $1.79 billion is all that is being imported by way of textiles from India. And just a while ago, just before the conversation started, Mr. Thirukkumaran mentioned that immediate benefits are more likely there, as well as I think from Oman, right? So in that context, are we adequately capacitized? And is capacity being added at all levels, including MSMEs? Not only at the manufacturing level of the particular products, but all the support industries that are required to function in order to realize this export that is very, very visible. Is it actually happening on the ground? Since your group controls the largest members, and similarly, huge number of spinning mills, integrated companies, everybody. So Tiruppur has to have those answers with them, isn't it?
Sir, actually, if you see the capabilities, yes, we have capabilities to manage 10%, 15% kind of a growth. And further incremental growth, naturally, the ecosystem will invest and capitalize once opportunity comes. If you ask subsector wise, integrated companies are used to do always well, irrespective of the cycles, because their efficiency is matching with the large companies in Bangladesh or Vietnam. So the cost game they used to win. Because of integration, their margin profile is totally different. But we have very, very few number of integrated companies in India. And majority of the apparel exporters are either standalone or semi-integrated. So if you ask where expansion is happening, spinning, no expansion. Last maybe 3 years, around India's 20% spindlage almost closed down due to various reasons. In every 10 years or every 15, 20 years, there will be a technology shift will happen in spinning industry. After COVID, machinery manufacturers stepped up their game and introduced very, very high productivity machinery. So, with lot of automation, lot of innovations. Now, the productivity of older machines versus the new machines are just 20-25% higher. It's not a small number. So, naturally, the older technology units are not able to compete. Along with there was a turbulence in the market, demand slowdown, lot of challenges with tariff. So many spinners voluntarily are going by the sickness of the unit, close it down. So at the same time, investments are happening in spinning at modernization. So people realize that without a new technology, it's very difficult to control the cost and also reduce the manpower, because manpower is the big challenge. As Mr. Thirukkumaran said, that's the number one challenge in all entrepreneurs' mind now. So naturally, people are going for investments in spinning from the last 2-3 quarters in terms of modernizing their facilities. In weaving, yes, lot of investments coming up. First time, I think we are crossing $1 billion of import of weaving machine in the recent times in India. Weaving machines are manufactured only in abroad in few countries. Indian weaving ecosystem, instead of betting on the old power looms or any other traditional technology, now importing state of the art technology, around 8-9,000 crore worth of machines came. That will help even apparel ecosystem. That will also trigger growth in the spinning ecosystem. And if you only one point I want to summarize, apparel, Mr. Thirukkumaran will explain about how they are adopting technology. But entire other industry up to apparel, people are going towards more of automation due to technological to capitalize the productivity advantages, minimize the cost as well as to manage the manpower scarcity. At the same time, India is missing a bigger picture. For example, I am not talking only about Tiruppur. In India, you take any apparel exporting country with a dominant share, an apparel maker will not go and buy yarn and do knitting or weaving or do some kind of compacting, processing, everything, and then finally end up with a lot of inefficiencies in the system. All countries betting on a simple model. The mill or organized sector will give dyed fabric to the apparel maker. Today also we just published on a study from a Vietnam apparel maker. He don't do anything. He import or domestically source fabric and efficient stitching. They are able to make 10% fat. So what the trick is, we need to develop in India dyed fabric ecosystem. Any policy intervention from the state and central government should motivate more spinners or weavers or even apparel makers to go towards the dyed fabric manufacturing ecosystem. One side, an apparel maker can concentrate only on apparel productivity and go and buy the available. This is what China is doing. This is what Vietnam is doing. We are not doing that. So it's a structural change one want to bring. At the, you may ask that whether industry is taking some efforts. I can definitely say India's top 3 spinners already stopped expanding in spinning. They started investing in processing units. Already one company, their dyed fabric and fabric turnover reached 40% of the size. Another company from Tamil Nadu declared that by 28-29 their turnover, 60% turnover will come from the dyed fabric ecosystem. This is the transformation which can bring the growth, efficiency, cost benefit, everything. Government still need to push more for this change, sir.
What he said, I echo him because this is one thing which we are missing. Then China or Vietnam, a fabric mill has to do a fabric. A garment exporter has to do garmenting. He has no business to do fabric. That's why the way your energy efficiency goes on that. And you don't invest on other things. You order your fabric, you get your fabric, and you concentrate on your how do you make a product development, how innovative you can be, how efficient you can be. That is what a garmenter has to do. Why China has succeeded in large volumes is because of that. And Vietnam is again a lot of Chinese companies are in it. So the same ecosystem is followed there. I think India is it's high time that India we follow that.
Okay.
Coming to what the technology upgradation, even in my company, we have implemented a lot of IoTs, that is Internet of Things, in all sewing machines. So that is to track, and we have developed a software. We are going to bring into the market. We have developed as a company. My company has developed IoT device, very AI embedded device, which I will also discuss with Prabhu sir later there personally. This is we are bringing into the to the ecosystem, and we have developed a very robust software, a dashboard which goes into tiny details where you can correct an operator where there is an inefficiency. So these are things which we are also doing as an industry, and also like a lot of embroidery machines. All I'm saying example embroidery machines which I had around 6 7 embroidery machines which I sold and I bought new ones, which are very the latest state of art
Right.
with a lot of attachments. So these are the things. Printing also same thing. You have a lot of digital printing. You have all type of new technologies. Even screen making is automatic. These type of things. I think Tiruppur is already investing. Tiruppur exporters are already investing. Companies are investing. Once we develop an ecosystem where a mill is supplying the complete fabric up to fabric, and the garment it does only the exporter does only the garmenting and another ecosystem from cutting to the finishing. I think I think India can grow multi-folds. I think
Right.
we can definitely the next 10 years we can reach. I don't know even overtake Bangladesh.
Yeah.
I might sound too optimistic, but it's the truth. I think India as a country, we have a very vast raw material advantage to us, vast labor force, and I think it's only technology digitizing. It is possible to digitize. I think we are also implementing in our company. We are also implementing an AI because AI, which is it can be integrated with any ERP. So I think these are things which there are. I think you will be surprised. There are two people from Germany who are Germans who are developing this AI software for the industry, and it will be a game changer.
If I may interrupt here, if that be so, do you see this change, which you very specifically spoke about with the reference to the highly productive fresh capacity that is coming in through new technology adoption? Is this something that is being taken up by the entire industry of your 1400 members? And if so, I have one more question. The credit offtake, which is not at a satisfactory level according to the both of you, it should have been higher, isn't it? Because there should be significant demand for credit for capacity creation, as well as there could be a definite need for higher working capital given the fact that export momentum is likely to pick up. These two things seem to be standing a little apart. Can I probe you further for a deeper insight into it, sir?
I think I didn't put it in a right perspective. I think digitizing and automating. I think we are not only few companies are doing it. See, Indians have a perception that only if it is proven, we will buy it. We'll adopt it, or we will buy it. We don't test it first. See, there are few companies like us who are adopting to this technology because AI needs some patience. You need to evolve. It will not automatically you install the AI. The tool works. It has to evolve. So I think the patience very few companies have. Once the ecosystem starts adopting, I think these guys are what I'm talking. These German guys who are adopting. I'm not promoting them because they're doing trial in 2 to 3 companies. Only 2 to 3 companies, but all of the AI systems I have seen, because this is particularly developed for the textile industry, because they have visited 8 countries, 45 different factories. They have IITs, IIMs, engineers who are developing this AI tool. So this tool will definitely be a very good game changer. And along with our what the IoT which we have developed, which will we will come into the market because when you give it into the system, all the ecosystem, I think it has to be a foolproof. So that's what we are trying to do, and these AI companies also trying to do. Once that comes, the first initial intake will be less. More and more companies install and prove it. I think the ecosystem will adopt. But I give you another 5 years time for the Indian industry, textile industry to adopt to this technology. It is not going to be easy. It's not. There are some investments needed, but I think there are a lot of schemes which the government of India will also bring in, especially the. We are just waiting for the policy for the textile expansion and employment scheme. So this is all on technology upgradation, automation, specifically on any upgradation you do. They are going to support that, but they all come under the policy. As a policy, they are not. The policy is not yet finalized. Once it's finalized, I think, and this we have a foolproof ecosystem where these tools can be used. I think it takes some time to evolve.
The Sumpoorn initiative is something that we work very, very closely with SIDBI. And SIDBI, as you know, is the largest institution that is vested with the responsibility to drive MSME growth through improved credit inclusion and through various refinancing schemes, etc. So, given the fact that the large part of what you spoke, and very rightly so, is going to be the export capability and the capacity is going to be determined by fast technology adoption of either the tools or the machinery and various AI pieces. Do you have an ask from a large institution such as SIDBI that there could be a technology support that can then benefit the entire industry? Is that something that uh, is a fresh ask that can be taken forward?
I think in the initial phase it will be difficult I would put the next 1 year is
Mhm.
one. But we have as we are doing a lot of AI sessions with a lot of automation, innovation, digitization. We are telling the importance of to our members why is it so, and I think with a lot of the next generation taking over the businesses, because it's all mostly family owned businesses. Even if it's large format, it's all family owned businesses. I think the next generation is coming in, and they are very more knowledgeable and they are more adaptive to new innovations and technologies. I think the next 1 year will evolve around, and I think definitely when the industry needs, we will need a support. I think a support where SIDBI and can definitely pitch in at the moment. I think a lot of solar and wind power, the renewable energy is financed by SIDBI. Most of the people go with SIDBI for that. And as you said, again, I like to tell you this: the only ESG compliant, that environmentally socially governed cluster in the world, I'm not saying in India, is on Tiruppur. Why? Because we recycle 130 million liters of water every day. 96% is reused, which is nowhere. Zero liquid discharge is not followed in any as a cluster. It's followed as individual companies, be it in Vietnam, China, or Bangladesh, not as a cluster. And again, we produce around 1,950 megawatts of renewable energy, and only 350 megawatts is consumed by this cluster, and rest is given to the Tamil Nadu.
Would this be something that uh, is a very, very important factor in how the EU and the other countries look at Tiruppur as a preferred source? Is this going to help us get a better competitive advantage?
Adding to that, one of the largest certifications of anything, be it social, environmental, Tirupur is the largest. I'm not in India, and as a cluster, no other country or the cluster in India is certified. Coming to your question, you know the DPP, the Digital Product Passport, which, from Europe, which is going to track your when you have a QR code, it will track right from where your cotton is sourced till your end product. We are ready. Actually, Singapore is ready for that. We are just waiting for the European Union to lay down the norms and identify the certifying agencies. So that much ready this cluster is, that we are actually pushing in our lot of our conversation. We are pushing for DPP because I think a lot of clusters, the brands are pushing it back because they are also, because circularity. Again, I will like to come to the circularity. So we have signed with two MOUs, one with the Reverse Resources, a European-based organization for tracking your textile waste, and we have also signed an MOU with Circlex. Circlex is also textile and non-textile waste. It's a platform where you can how you can right from where your waste is taken up to how it comes back into the ecosystem. Whichever non-textile waste is non-usable, it's burnt and you have a record how of it is done. So that much Tirupur is ready, even with circularity, I'm saying. So that's why we have a very big advantage. Why we are putting 10 billion as a target for the 2030 is we are very optimistic about the any new governance rules comes in Europe or any other place.
Fantastic. This question, again, I would like to now ask Mr. Prabhu very specifically. What are the supply chain constraints of your industry? Because there was a lot of discussion about fabric, dyed fabric being readily made available. If the industry, from a knitting perspective, should be able to generate a 10% profit margin, as is similar to, let's say, Vietnam. There was very specific reference made. But beyond that, what do you see, sir, are the very specific supply chain constraints for the industry, and more specific to Tiruppur, in order for it to maintain its predominance in the segment per se?
Sir, if you ask me as a country level, two or three structural challenges I can highlight, and it shoots to our own region also, either Coimbatore or Tiruppur. The first one is the MMF. US imports around 7 lakh crore worth of apparel. Exactly 3.5 lakh crore cotton, 3.5 lakh crore 50-50, 3.5 lakh crore MMF apparel. In cotton, we are maintaining double-digit market share, around 10 to 12%. And in MMF apparel, we have only 2%. So this is, but the real growth is happening only in MMF apparel. So naturally, whatever may be the reason, we are not able to grab the market share. That is where a national fiber mission on MMF or national, how we can say, a new scheme to energize the industry to go for MMF manufacturing way of schemes and all, we need to work. And it's a cultural change because we used to master only with cotton, and as Mr. Thirukkumaran said, now Tiruppur cluster is innovating and trying to grab, and still long way to go. Only very small volumes are happening, and selective companies only adopting. So for MSMEs, that may be the good strategy, because you can't play $1.1 or $2 game and compete with the integrated players. So you need to go for a differentiated product, and many product scope is also very wide. So this is one structural challenge. Second structural challenge, the apparel clusters, wherever strong now, either it may be in Tamil Nadu or Karnataka, we don't have a homegrown labor, because these economies are transformed into a service economy, consumption economy, and people have high school and college joining rates. They don't prefer the traditional manufacturing jobs. A lot of high-tech industries are coming. End of the day, apparel sector or even textile sector, whatever you try automation, we need manpower. So how we can integrate with the healthy, how we can encourage healthy migration, how we can bring, because these clusters are the strength of India's economy. And every state trying, but they are not, still after all these challenges, Tamil Nadu holds 37% of India's garment exports, 35-37%. And the reason is no buyer will leave any cluster, developed cluster, for the past 40-50 years, because it's very difficult to duplicate an ecosystem. So, for simple reason, how we can maintain and also achieve growth, only availability of manpower. So we are all struggling. So how we can imagine housing societies, how government can help. A larger companies can build on their own. Government can give some form of a subsidy to support the cost. So we need a lot of debate on this subject. So how China, they managed well, because it's a single country. They created a lot of fast trains, and wherever manpower available, they are able to bring it back to the industrial clusters. And we need to try our own methodology. These two are the major immediate challenges apart from the developing of fabric ecosystem.
One last observation before we conclude is that the EU FTA does seem to indicate the opportunity in textiles to a very, very large sum of 268 billion or 22 lakh crores. And we are still at an India level at 3.16 lakh crores. And out of that, the knitwear segment is smaller, of course. Within that, it's a large part, but it's contributing 1.5 lakh crores. So the gap is so huge, and that therein lies the largest opportunity that is presenting itself virtually by the scrappage of tariff on thousands of lines of product. So that being there, I think it's is this opportunity that has to be harnessed by the associations such as you and the federations working together and in harmony to be able to realize the ambition for Tiruppur to stay ahead of the curve and to contribute to the growth of Viksit Bharat. So it's really fantastic having the two of you provide us with those insights. These, I think, would be most appreciated and welcomed by the industry leaders, especially we address a significant population of lenders who are economists and other credit underwriters and heads of businesses. I'm sure, and policymakers as well. I'm sure they would take some of these observations as suggestions and recommendations and look into it. Takeaways from the conversation, yeah, regarding modernization and possibly a request for certain allocations of funding by dedicated institutions to help in this journey of the knitwear industry transforming itself. Second thing is to ease the housing and migration constraint, as also some of the other aspects that you spoke about. Those, of course, the certifications, etc., which are likely to give us competitive advantage. These have been very, very beautifully highlighted, and I must thank each one of you for those very insightful comments. Sumita, if you have anything to add, please do.
Thank you both so much for sparing time to talk to us today. We really learned a lot, and just thank you very much.
Thank you.
Thank you.
Thank you so much.
Thank you.